What's up guys, and welcome back to the channel. The Great Britain pound is recently on the all-time low. The last time Great Britain pound was this low was in 1985. All right, so just imagine what is happening in Great Britain to cause their economy to be able to slumber in this particular manner. So just check these particular articles and you'll be able to understand what is going on. You can see this particular article is from the New York Times. They're talking about the British pound touches a record low as investors balk at government tax investors. Then look at this. This one is from Cointelegraph, talking about the same thing. Great Britain pounds follow Euro pound dollar. And then this one is from the Washington Post, talking about the same thing. British pound falls to all-time low against the dollar as tax slashes, right? Then this is the one I want us to look into. This one is from edition.cn. And what are they talking about? They say the Great Britain pound just hit it all-time low. But this is the most important thing I want us to take from this particular chart. You can see there's no way I was going to use my MT4 or my MT5 to show you guys this, because my MT5 wasn't going to show me the data for 1985. You can see we have the data here from 1980 right up to 2022, and you can see even I think this was 1980. On the December 1980, the dollar or the Great Britain pound used to be $2.6 or $2.3, but today, see, it's worthless. It's almost the same like the dollar. As of today, the price of the Great Britain pound is 1.04, guys. Then see, the last time the price was even below or almost $1 was in 1985, on March 4th, 1985. That's when the Great Britain pound was on 1.04. Meaning if you travel to the United States with 1,000 pounds and you change it to the dollars, you're just gonna obviously be having the same thing. You'll be having $1,040. All right, 1,000 pound, you'll be having $1,040. As opposed to when the dollar used to be, the pound used to be $2. If you had 1,000 pound, and you change it to the dollars, you'll be having $2,000. So you see how useless the Great Britain pound is becoming as of recent. Good, but that is not, we don't even care whatsoever is happening in Great Britain. We don't care why their economy is going down. As traders, what is our concern is how to capitalize on this move, is how to trade when there's what we call extreme bullish move or extreme bearish move. Extreme bullish move is when a particular currency records its all-time high, while extreme bearish move is where a particular currency records its all-time low. So in our case, for the Great Britain pound, we are talking about extreme bearish, all right, because the market is extremely bearish. Now, how do you trade these particular scenarios? Let me go back to my MT5 and I'll show you guys some few examples, because you need to be careful. This is fundamentally, we already know the Great Britain pound is dropping, but you need to know where to enter. You need to be very, very careful. If not, you just go and follow all these articles, or maybe you see on Instagram everyone is talking about how the Great Britain pound is going down, and then you just run, you just jump and you go and place trade. Immediately you place your trade, the market started going against you. You think maybe this is personal or the market is against you or something. No, it's because you don't know how to get snapper entries when the market is in extreme bullish movement or extreme bearish movement. What am I talking about getting snapper entries? Let me just take Great Britain pound as an example. Good, you can see, can you see what is happening? This is Great Britain pound. If I go across all the currencies, you will see the same thing. That is Great Britain pound. If I come here and I open, let's just go again. Let's go to Great Britain pound AUD. The same thing. All Great Britain pound pairs are falling. See, the same thing. Can you even see? I can't even see the end of my screen. Falling, the same thing. Good. Let me just take one currency pair and I'll show you guys the example on what I'm talking about, right? You can see here we have a clear downtrend from January to now. The Great Britain pound USD has been in a clear downtrend. But this is where we are more concerned, somewhere here. How do you take trade? Remember, I'm a trend trader. I want to only trade in a direction of the trend. But knowing that I want to only trade in a direction of the trend, how do I get into trade when I see that the market is an extreme bearish momentum like this? Because see what happened. Just imagine, guys, yesterday the market opened somewhere here. Let me show you. The market opened and it pushed right down somewhere here. and maybe somebody told you that, okay, the Great Britain pound was going down, you just run and you came and you bought somewhere here. Immediately you bought somewhere, can you see the retracement? The market retraced against you for almost about $500. This would have knocked out all your stop losses. This would have blown your account, even though the market is still bearish, right? Even though the market is still going down, but this would have knocked you out of the trade. So how do you get into trades like this? The first thing you need to know is you need to be able to use price structure or market structure to be able to enter the trade on a lower time frame. Good. What do I mean? If I go on the 4-hour time frame, now let's go back on the 4-hour time frame, you see I have areas where I can be able to get into this trade, because the moment there's something in Forex they call an impulse and a correction. An impulse and a correction. So anytime there's an elasticity in the market, or anytime you see that there is extreme bullish move or an extreme bearish move in the market, you wait for the correction of that particular move. So if there's an extreme bullish move where the market is going up, I'm going to wait for a correction for the market to pull back in the opposite direction, so that I'll wait for the buyers to take control and I join the trend. If it is extreme bearish condition, then I'll wait for the market to pull back against me for a couple of pips, then I'll wait for the sellers to come into the market and I'll join the trend. As easy as that, nothing complicated. So in our case, we already know what was happening. We already know very clearly that the market was in a clear downtrend. So what were we waiting? We were waiting for an impulse. We were waiting for a correction. This was our impulse, and then here you can see here we had an impulse. So after that impulse, the only thing I'm looking is to be able to look for a reversal sign. And most patterns that I used to be able to get my reversal sign, just candlestick patterns and price patterns, right? Good. And remember, I'm using the 4-hour time frame. I've already determined the market direction on the daily time frame, and I'm doing all of this on the 4-hour time frame. So on the 4-hour time frame, you can see clearly we have a bearish engulfing candle. Clearly, this is a clear reversal sign. We have a bearish engulfing candle somewhere here, which is showing me that, okay, now buyers or now sellers are in control. So I would have sold somewhere here, my stop loss somewhere here at around 200 pips, and in this case I go for a risk to reward of 1:2. So my take profit will be on 400 pips. The market would have been in a loss of almost about 50 pips, but it's fine. We gave our trade room to breathe, and they see enough room for the market to move. That is a signal that I'm indirectly giving you guys, but that is how I would have entered this particular trade, with flexibility, with peace of mind, knowing that I've done my part, and if the market goes in that particular direction, according to the market structure, I'm going to come out with at least a profit or a risk to reward of 1:2. That is how I'll be able to enter in any particular move. Let me show you guys another example on another currency pair. This is Great Britain pound JPY, right? Can you see the move? I can't even see the end of the move. This was the move right down. This candle you are seeing here, this was the move for more than, so the market has been falling for more than 1,200 pips. Good. So let's use the same technique to see how we would have traded this particular currency, right? This particular currency pair. Remember, this is our impulse. We're looking for a correction. Let's move down to the lower time frame to look for our correction. Let's zoom. Let's go right down. Let's look for our correction. The same thing we are seeing on the same thing we saw on Great Britain pound USD is the same thing we are seeing on Great Britain pound JPY. What do? You can see here we have a bearish. We had our impulse. This is our impulse. This is our impulse, and now we have our correction. After that correction, what are we expecting? We're expecting something like this. Unless, so we keep looking for sell opportunities unless the market structure has changed. But if the market structure doesn't change and we are still making lower lows, lower highs, lower low, lower highs, that is still a clear indication of a downtrend, and we're only going to be looking for buy, we're only going to be looking for sell trade. So that is what I'll do. And here you can see very, very clearly we had our bearish engulfing candle. So I would have entered my trade somewhere here, my stop loss somewhere here at 220 pips, and my take profit somewhere here at 500 pips. You see, that is a risk to reward of about 1:2.5. It's a good trade. So that is how I would have traded most of those currency pairs. You don't need to panic when you see this move. Yeah, I would have taken the trade somewhere here, but now I would have already been out of the trade by about minus 50 pips. But that happened most of the time in Forex trading, all right? Where you buy the market first of all go against you before going up. You say the market first of all go against you before going up. That is what they call stop loss hunting. Market makers will do that most of the time. And if you don't know how to place your trade, you suffocate your trade, then the market will just pull against you, trigger your stop loss, then you see the market will continue going in your intended direction. I know how that sucks. That is very, very aching, right? So that is how you are able to trade the dips. That is how, when you see in a particular dip in the market, when any particular currency pair hits all-time lows or all-time high, or when you see in a particular dip in the market, maybe there's a major fundamental news. Even sometime when the president of major banks or the prime minister of Britain, when they used to talk, you see the market will divide into two. The market will move in this particular manner. So you come in with the same system, you look for what they call an impulse, then after determining your impulse, you wait for a correction. After the correction, you are just looking for any candlestick reversal pattern. It can be a hanging man, can be a kangaroo pattern, it can be a fully engulfing pattern, it can be the marabuzu. You guys already know all the candlestick patterns. So you only use that particular pattern now to look for your reversal where the sellers or the buyers are going to be getting into that particular trend. Thank you guys so much for watching to this particular point in time. Make sure you check the links below to be able to use the same broker I use if you want to join me in College University. Also check the link below. If you like content like this, make sure you smash the like button on the video. Check this other video which I'm going to post here, which is related to content like this. Also check this other video which I can't talk something like this without mentioning about this particular video. Click here to subscribe to the channel, and I'll see you guys on these other videos.